sarcastic on you, Katie. I love it. But just like unbelievable, sort of all the bond market really volatility that really puts this week in perspective.
I have to talk about that bond market volatility because if you take a look at what happened with PIMCO, for example, billions worth of outflows, tens of billions, and Bloomberg spoke earlier with the Allianz CFO, the parent of PIMCO, about market volatility and the view on what's ahead.
I wouldn't say that we are in a situation where we have a capitulation, but I think we are entering anyway a situation of more stability after what has been a strong shock in the interest rates development.
So it's very confusing to so many people in the market, the meaning of capitulation, again, guys, when rates are all over the place.
Okay, let's push things forward to next week and what we have coming up. Lots of economic data, of course. We're going to get inflation numbers. We're also going to get retail sales in the coming weeks. And as Michael McKee, international economics and policy correspondent, reminded me earlier, there's still another employment report that happens before the next Fed meeting.
Yeah, and I would say the inflation number obviously is the most important. You know, I was looking at some of the polls. Inflation is by far the #1 issue for voters. We have the midterms coming up, so I think that's probably the only hope for a rally is if that inflation print is lower than expected.
I think the CPI print is something, the PPI print, and Tim, your very favorite, Katie, maybe your favorite too, the UMich survey numbers as well that come out about a week from now as we think about the sentiment and how consumers really are feeling about at least the data that the markets too are also trying to digest.
It used to be lower down on my priority list, but now that I know that Powell is really closely watching the UMich numbers, I care deeply. I have a fun fact for you guys though. It felt like a very big week. We all lived through it. The S&P 500, though, it's just a 10th higher on the week.
Yeah, they're really not remarkable moves anywhere you look. But when you still think about it, you have to wonder what level of inflation gets concerning when you think about rate hikes moving forward and how long they last for, how high they are.
All right. Well, gives us plenty to think about, but we are going to be back pretty soon because in 30 minutes, we're going to be here for the countdown to the close, live on TV, radio, and YouTube. Don't miss Beyond the Bell at the market close, 4 p.m. Wall Street time.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Hey, it's Bloomberg Business Week. Tim Stenovic and Katie Greifeld live in the Bloomberg Interactive Brokers studio. Katie, shocked to see that just for the week, we're barely moved on the S&P.
I know, it really masks a lot of the stomach-churning volatility that we had.
I mean, maybe I'm just thinking back incorrectly, but it just felt like there were bigger moves higher than there were lower. But,
memory is misleading.
It is. That's why we have the data here. Check it out on the Bloomberg Terminal. You're listening to a Bloomberg Business Week right here on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Bloomberg Business Week. Tim Stenovec and Katie Greifeld. We're live in the Bloomberg Interactive Broker Studio. Katie, I said it was all about three words today: jobs, jobs, jobs. We are continuing our coverage. In just a few minutes, we're going to be speaking with Becky Frankowitz over at the Manpower Group North America. It's among the biggest staffing firms in the world, so she's got a great idea of what's going on in the jobs economy. First, though, Charlie Pellet. Let's get an update on the trading day.
All about jobs, jobs, jobs with the Dow, the S&P, NASDAQ. They're all on the minus side right now. It has been a volatile jobs Friday. We've got the S&P down 22 now, a drop there of 0.5%. The Dow down 28, lower by 0.1%. NASDAQ Composite Index down 117, drop right now of 0.9%. 10-year yield 2.83%. The 2-year yield 3.23%. Treasury sank after data showed a booming labor market that might prompt the Federal Reserve to raise rates sharply at its next meeting. Spot gold is down $17 the ounce to $17.74, drop there of 1%. West Texas Intermediate crude 89 even a barrel. WTI up right now by just about 0.5%. We are on track for a winning week for the time being, possibly up for a third week. So what is the outlook for equity markets? Jill Carey Hall is U.S. equity strategist at B of A Securities.
The S&P 500, in our view, is not yet reached its bottom. Typically, when you look at other bull markets and the start of those bull markets, typically you see the Fed cutting before the market bottoms. So our view is that the S&P 500 ends the year at 3,600. The sort of worst case floor scenario in the event of a more severe recession, our bottom scenario could be around 3,000 to 3,200, but 3,600 is our base case target for year end.
And right now we do have the S&P 500 index at 4128, lower today by 0.6%. Pfizer in advanced talks to buy Global Blood Therapeutics, the maker of a therapy for sickle cell disease, for about $5 billion. This according to the Wall Street Journal. Pfizer shares today. Right now we do have Pfizer trading down by 1.3%. The big story, though, global, it is up by 37%. Of course, that's Global Blood Therapeutics, again higher by 37%. Recapping, stocks trading lower with the S&P down 23, down 0.6. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, let's get back to this blockbuster payrolls report. 528,000 survey estimates by economists surveyed by Bloomberg showing 250K was the expectation, just blowing past expectations. Really eager to get to our next guest, Becky Frankowitz. She's president of Manpower Group North America. She joins us this afternoon on the phone from Chicago. Manpower Group is a workforce solutions company. It's among the biggest in the world. They do business across 80 countries. They've got 400,000 clients. So Becky's got a great idea of what the jobs market looks like. Becky, great to have you with us. Did this surprise you? Because it seemed to surprise everybody else.
Hi, Tim. Well, what I'll say is that the economic indicators are signaling caution, 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 yet the American worker is saying confidence, confidence, confidence. So you said jobs, 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 so I'll stay with the three.
Nice.
We knew that it was going to be a positive report. You know, the tough thing about the jobs report is it's really a little look in the rearview mirror, but we knew it was going to be strong. I don't know that anybody anticipated this strong, but what we know that even with the talk of slowdown, the American employer hasn't quite gotten that memo because they keep hiring.
Becky, was there anything bad in this report? I'm being a little bit of a pessimist today, but was there anything that, maybe was a little bit worrying?
Yes, I'd say two things, Katie. One, that workforce participation, it went down slightly, but the fact that it isn't going up is what is very worrying, especially with wages that continue to grow. And so that's one. I think the other is we do have to keep in mind this is a bit of a look in the rearview mirror, and we might see as we proceed through, the month of August, a little more of a cooling off. I'm not seeing, a nosedive on job hiring or an increase in supply yet, but we might see a tad bit of cooling off. The challenge is we see services just booming as I heard it this morning called revenge travel, as consumers are saying, I don't want to stay home, I want to go and create experiences. And so that sector of the economy is really booming.
Yeah, I guess, Becky, what happens, in the fall when we're done with summer, kids are back in school, and, it's kind of like put your head down and start working again. Do we see that services really pull back?
Yeah, I think we'll see a steadying. I don't know if I would say pullback, Tim, on anything.
Wow.
But I think we'll see a steadying. And as I was just spent several months in Europe as well, meeting with CEOs and CHROs there as well as across the U.S.
Several months, Becky?
Several months. I spent 2 months.
That's not bad. That's not a bad business trip.
Well, it was a long hours in a lot of countries, so don't read it as glamorous as it
Okay,
sounds.
I believe you.
But what I will say is, in all the CEOs that I met with, regardless of country, regardless of sector, all are asking the same question, which is when labor supply will loosen a little, and they would welcome a bit of loosening, not because they're looking to do layoffs, because they're looking to fulfill existing demand.
And Becky, I want to talk about women specifically, because as Mike McKee mentioned to us earlier, if you look at what drove this really, really surprising 500,000 ad, the total number of employed women rose by 327,000 last month. Big surprise there. What is the dynamic behind that big gain?
So first, let me say, yes, finally, we have women coming back into the workforce. The alternative is we saw adult male participation go down, so we can talk about that if you want, but very pleased to see women re-engaging in the workforce. What we know is going into the crisis, women pulled back in part because the role they chose, in some case, had to play at home, but also in part because the sectors hardest hit, Katie, were those that were most represented by women. Education, childcare, even retail to some extent. And so I think it's a combination of, one, women saying, okay, now I'm ready to get back into the workforce. Kids are going back to school. It's my time to reengage. And I think, two, some of the sectors that were hardest hit are now coming back again: leisure, hospitality, retail, et cetera.
So, Becky, what are you hearing from the companies that you work with around the world right now when it comes to any areas that they're seeing softening demand? I mean, that's what central banks around the world want to see.
Yeah. Well, I think I was amused a bit by the headlines as I was sitting overseas in the U.S. about the tech companies laying off, because I don't know if you dug into the unemployment, but tech unemployment went from 1.8% in June to 1.7% in July, even with all those headlines. And so the economy just absorbed all of that amazing skilled labor. And so we're not seeing softening. Again, leisure and hospitality is really coming back, still not back at the pre-pandemic levels, by the way, so room to grow there. And if you've observed the travel challenges around the world, that's living proof that we need more people in those areas. Tech continues to be strong. Healthcare, again, added several 100,000 jobs this last month. Registered nurses are still the most in-demand job in the country, followed by truck drivers. So we're really seeing strength across the economy. Now, again, I believe that will cool, Tim. I believe it's going to cool as we get to the summer. Yeah, but I don't believe it's going to plunge.
And the Federal Reserve certainly hopes so. Becky Frankowitz, President of Manpower Group in North America. Always great to have you on the program. To Washington, D.C. we go for world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. Well, Senate Democrats say they have reached agreement on changes to their marquee economic legislation, clearing the major hurdle to pushing one of President Biden's leading election year priorities through the chamber in the coming days. The breakthrough came when Arizona Senator Kyrsten Sinema agreed to move forward on the bill, now that it no longer contains a provision that would have narrowed a tax break for carried interest. Well, a bipartisan group of former EPA administrators is endorsing that tax and climate bill, as we hear from Bloomberg's Nathan Hager.
The group has released a statement calling the Inflation Reduction Act the most significant piece of climate legislation in U.S. history. They say it puts the U.S. on track to meet President Biden's goal of cutting emissions in half by 2030 while making investments in clean energy that will save families hundreds of dollars a year and create good-paying union jobs. The group includes former EPA Chief Carol Browner, who served under President Obama, and Bill Riley and Christine Todd Whitman, who led the EPA during Republican administrations. In Washington, I'm Nathan Hager, Bloomberg Radio.
A day after WNBA star Brittany Griner was sentenced to 9 years in a Russian penal colony, Russia's Foreign Minister Sergei Lavrov signaled that Moscow is ready to talk about a prisoner swap. Secretary of State Antony Blinken addressed that possibility.
What Foreign Minister Lavrov said this morning and said publicly is that they are prepared to engage through channels we've established to do just that, and we'll be pursuing that.
Again, that's Secretary of State Antony Blinken. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stanovic and Katie Greifeld. We're live in the Bloomberg Interactive Brokers studio. So late last night, got the alert on my phone, Katie, that the Democrats have dropped carried interest as Kyrsten Sinema, senator from Arizona, has paved the way for a tax vote.
Yeah, I also
This is the
got
carried
that
interest
alert.
provision in the bill. Sorry.
The carried interest provision in the bill. The Democrats agreed to drop it. Of course, this would have narrowed a tax break for carried interest. That means that wealthy private equity managers and venture capitalists will continue to be able to pay a lower capital gains rate on one of their main forms of compensations.
Yeah, so good. It's good news for them.
Good for them.
Yeah,
Yeah, that's
good.
great.
It's great. It's great for them.
I was just, we talked about the Tiger Cubs. I was a little bit worried about all those hedge funds.
I can't tell if you're being serious.
I don't know.
Democrats have been eager to finish work on the legislation, even though it's been drastically scaled back from Biden's original vision for an expansive tax and social spending package that would advance the party's climate goals. We did hear from President Biden from the White House. He does remain in isolation due to COVID-19, but he praised this as, quote, another critical step toward reducing inflation and the cost of living for American families. He urged the Senate to pass it quickly. Voting will begin this weekend. Once again, Katie, we go back to sort of the, earth-shattering news last week that this had been hammered out between Senator Chuck Schumer and Senator Joe Manchin of West Virginia. So they got Manchin on board, and in order to get the moderate Kyrsten Sinema on board, they had to drop carried interest.
So removing this specific measure to raise taxes on private equity managers from this bill means that the legislation, which, again, Democrats initially envisioned as a way to overhaul the tax code, it won't include any new taxes on the rich, Tim.
Yeah, that's kind of surprising.
It is a little bit surprising. Again, when you just think about Joe Biden and the Biden administration's original vision to end up here, but maybe they'll actually pass something.
Yeah, well, to that end, Senator Chuck Schumer, Senate Majority Leader, said that the revised legislation, all 50 members of the Democratic caucus are backing it, including Joe Manchin. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Jobs Friday, and it is a down day. The S&P, however, has trimmed declines after dropping as much as 1.1%, as investors speculated that the threat of recession has receded enough that corporate earnings can remain robust. Treasuries sank after data showed a booming labor market that might prompt the Federal Reserve to raise rates sharply at its next meeting. Right now, we've got the S&P down 21, lower by 0.5%. The Dow also lower, down 19 now, drop there of less than 0.1%, little changed. NASDAQ down 114, drop there of just about 0.9%. 10-year yield 2.83%, the 2-year yield 3.24%. Spot gold down 0.9%, $17.74 the ounce, while West Texas Intermediate crude is up 0.4%, $88.91 a barrel. So again, recapping, equities lower across the board. S&P down right now by 21 points, a drop of 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, we continue our focus on this week's edition of Bloomberg Business Week. The entire magazine is a special edition dedicated to the life of women in America post-Roe. We've got a really fantastic story to highlight. It's written by Jill Filipovich. She's a contributor to Bloomberg Business Week. She joins us right now on the phone from Brooklyn. Jill, this story, I'm so glad you wrote it because it answered so many questions that I've had about fertility treatments in the wake of Roe v. Wade. Anyone who knows anything about fertility treatments know that they're just a grueling path to building a family. But with embryos gaining new legal protections with the fall of Roe, IVF could actually become criminalized. Jill, you write all about it in this edition of Bloomberg Business Week. It's available on newsstands, online, and on the Bloomberg terminal. Make the connection for us, for our audience, to the fall of Roe and IVF. How are they connected?
Sure. So as it stands, IVF remains legal in all 50 states in the U.S., with some restrictions depending on the state. However, with Roe falling, you're seeing a real push from the Right to Life movement to establish essentially fetal and embryonic personhood. And if personhood bills pass, which essentially imbue a fertilized egg from the moment of fertilization with full rights, due process rights, and certainly a right to life, you're going to see IVF become either extremely difficult, if not potentially criminal. And that's because IVF procedures typically result in the creation of multiple embryos, and the embryos that are not viable are discarded. Embryos that don't form a successful pregnancy or can't form a successful pregnancy will be discarded. And couples often create more embryos than they actually implant at one time, and then store those embryos for future use. If those embryos have full rights, you can see how that would get quite legally complicated.
So, Jill, I mean, I was saying to Tim in the commercial break, for example, IVF, it's all about creating more life. It's about, creating a baby for a couple to have. But I mean, I guess that's the crux of the issue is that, these embryos theoretically under this vision, they would be people. They would have those rights that you're talking about.
Right, exactly. And so there's a question of whether that would necessarily make IVF illegal or whether it would just make the legal landscape so dangerous and so complicated that providers essentially wouldn't want to practice. So, for example, part of what happens in IVF is if you create multiple embryos, those embryos go into a storage facility and they're frozen. And if you want to use one later on, you defrost it, essentially, and you have an embryologist who defrosts that embryo. Most embryos survive that process. Some don't. If an embryo has full personhood rights and it doesn't survive the process, embryologists could become legally liable, potentially criminally liable, and certainly potentially civilly liable. And so there's real questions about whether anyone is going to want to practice IVF under those conditions.
Well, that's what I want to talk to you about now, Jill, because you spent some time with providers and indeed some women and some couples going through IVF and fertility treatments. What did you hear from Elizabeth, which we should note is a pseudonym? Tell us her story.
Sure. So Elizabeth is a woman who lives in New Orleans. I met her at her home. She has one daughter who was conceived through IVF after 2 grueling years of infertility. And Elizabeth and her husband both want a second child, but they weren't planning on starting that process for at least a few more months and potentially into next year. When the Supreme Court decision in Dobbs overturning Roe v. Wade came down, Elizabeth and her husband decided to pretty significantly move up their plans for a second child. So she made an appointment right away at the fertility clinic that she had used previously. She, when I met her, was already taking hormones to prepare her body for an embryo transfer. And then the night before I met Elizabeth, she was actually kind of reeling when I talked to her, because her husband had turned to her in bed and essentially said, you know, I'm really nervous about you being pregnant in this environment. I think both of them have been reading many of the horror stories that have come out post-Roe of women who weren't appropriately treated for ectopic pregnancies, who weren't appropriately treated for miscarriages, who wound up in the ICU because they couldn't get safe abortions when they had pregnancy-related emergencies. You know, and her husband said, you're a woman in your mid-30s. This is an IVF pregnancy. It's going to be a high-risk pregnancy. I don't want to lose you. And so the couple is now struggling with that question. Do they stick with just one child? Do they speed up the IVF process because they're afraid that they won't have the ability to do it later? But in doing so, do they potentially risk Elizabeth's life? And these are questions couples all over the U.S., women all over the U.S. are asking themselves.
And just impossible questions. And Jill, put this into context for us about, how common IVF is. How many people like Elizabeth could be out there in the U.S. right now?
IVF is incredibly common. And to be clear, while IVF is the fertility treatment most at risk, it's not the only fertility treatment available, and it's not the only one put at risk by new anti-abortion laws. So right now, roughly 2 of every 100 children born in the U.S. Were conceived via some sort of fertility treatment. So that includes IVF, but also a series of others. And IVF is particularly crucial to same-sex couples. It's crucial to couples or individuals who have survived cancer, and then obviously anyone struggling with infertility. And it's only growing as more and more women delay childbearing and want to plan when they have children.
Where does this leave providers, Jill, and how providers navigate this? Are they going to have to start doing things in other states if they're based in a state that has personhood rules?
Providers that I've spoken to, including the providers I spoke to for this piece, really are in, frankly, a bit of a panic. A lot of their work has been thrown into question. They can provide care right now. Many of them are consulting with lawyers pretty regularly. But yes, it does open up questions of where can you store embryos? Do you want to store embryos in a state that restricts abortion rights and that could potentially pass a personhood law? The provider that I interviewed for this piece, she brought up the fact that in multiple pregnancies, which are common with certain fertility procedures, so pregnancies where you have, let's say, triplets or quadruplets, those are typically not very safe pregnancies for either the fetuses or the pregnant woman. And so the standard of care in those cases is to allow women the choice to have what's called a selective reduction, to reduce down to 1 or 2 fetuses, which improves the chances she's going to survive, but also the chances that the babies survive. You can't do that in states that outlaw abortion. So women are then having to make very tough decisions around what kind of fertility treatment to use, and often selecting ones that are going to have to be more expensive and more invasive.
Jill, we're going to have to leave it there. Jill Filipovich, contributor to Bloomberg Business Week. Check out her story. It's in the current issue of Bloomberg Business Week magazine on newsstands now.
to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. About 60 minutes left into that trading session. Taylor Rigg, Sonali Basak, Eric Balchunas darkens the doors as we are now joined by our colleagues Tim Stenovic and Katie Greifeld, together welcoming our full Bloomberg audience across TV, radio, YouTube, and Tim, 60 minutes until the closing bell, and then maybe hopefully a weekend upon us.
Yeah, hopefully a weekend upon us.
Unless you're Bitcoin.
Yeah, unless you are, exactly. Hey, I've been looking for stocks that are moving in the wake of that blockbuster jobs number that we got early this morning. Look no further than gold miner stocks. Check this out. This is the VanEck Gold Miners ETF. It is, of course, full of gold miners, down we can go ahead and round that up to 1.8%. Because the report showed the likelihood that the Fed continues on this aggressive rate hike path. So we're seeing some gold miners move lower today, Katie.
And I'm going to go from gold to Bitcoin. Taylor teed me up nicely there. Bitcoin, we were talking about how uninspired the S&P 500 was. Bitcoin seeing a little bit more life there, up about 1.4% or so, hanging out below $23,000 per coin. We'll see what the weekend brings.
A little bit of an uninspired sector level as well when you think about sort of a further tilted weight here to the downside. Before I get to the sectors, we'll take a look at the majors. And this is really interesting, the price action. You have a Russell 2000 at the bottom of the screen, firmly in the green as we're trying to think about some of the small cap, more domestically focused stocks that do better maybe in a stronger dollar cycle, that don't have that exposure if Federal Reserve is really, really hiking. Everything else maybe uninspired and tilted to the downside. That's really where I want to go when we take a look at some of the individual sectors as well. Inside the terminal here, energy. The theme for the day has been the theme for the year. Energy, Sonali's up an additional 2.3%, along with financials that are really getting a lift here today with yields rising. Everything else, though, technology, of course, and discretionary now off about 2% for that sector.
Yeah, I want to talk to you about some individual movers here, Taylor, because you are seeing some things move a lot higher. Atlassian is one of those earnings gainers. You're seeing it up the most in the NASDAQ 100, up more than 15%. Tesla is the worst performer in the NASDAQ after a 3-for-1 split. Gives investors what they wanted. It's probably a less of a drop-off than what would have initially been expected. Warner Brothers is the other one I wanted to talk about because they are really disappointing here, the worst performer in the S&P 500. Remember, not only is that merger creating some headwinds, but so are advertising sales, as they are for many people, guys.
Yeah, pretty remarkable to see that Warner Brothers Discovery move. We're going to have Martin Pierce joining us in a little bit for Bloomberg Opinion. He wrote all about Warner Brothers Discovery, so we're looking forward to that chat. But back to jobs, because earlier today, we've seen the Biden administration weigh in on what was a blockbuster payrolls number. Check out what Marty Walsh, U.S. Secretary of Labor, had to say on Bloomberg TV a little bit earlier.
Thinking about where we are today was really incredible, and I think that this will, in my opinion, will be sustainable moving forward. I think companies are understanding. I think we're going to have a new type of economy. I think we're still obviously dealing with inflationary pressures. You talked about it right before we got on the air here. I heard you talking, and I think that, we're going to adapt and adjust, and we're going to move forward.
That was U.S. Secretary of Labor Marty Walsh earlier today on Bloomberg TV. The question of sustainability, Sonali, I mean, obviously, we're not going to be seeing blockbuster payrolls figures like this each and every month. But in an inflationary environment, you have to ask the question, if we are seeing a labor market that Fed Chair Jay Powell has said is too hot, then what is he thinking on a day like today when we see a July jobs report come in, even after the Fed has signaled that it is on this aggressive rate hiking path?
Yeah, and you're seeing that idea of higher interest rates really bake into the stock market because of this anticipation that the Fed may move. However, I've got to say, guys, I mean, it's not just the economic data. This fall is just a jam-packed schedule. We have the midterms coming up. So, I mean, it's hard not to kind of like look across the horizon here a little bit and not think that things can be a little bit choppier for a lot longer.
Yeah, and you talk about the rates being baked into stocks. One of the areas in ETFs that has been a real winner this year is high dividend ETFs, because people want yield still, but they're now afraid of the bond market because of the Fed. And these ETFs tend to be weighted in energy, so they outperform as well. So seeing a little bit of a bump on HDV and tickers like that.
And you think about if it's more of a shorter duration asset, if you're getting some of those cash flows earlier to help with some of the inflationary prints that we're getting. And Katie, that's where I want to go next when we think about where to invest in the middle of 9.1. Maybe it ticks down to CPI to 8.8. I think Morgan Stanley's out for a note, maybe 8.6, but it's still an 8 handle, and it's still a lot, and it still means that your real wages are negative.
And the call I keep hearing is, to Eric's point, go into dividend payers. I mean, that's where the safety is. People just want income at this point. I've heard the same argument advanced for some of these shorter duration debt funds too. You know, at least you're clipping some sort of coupon there, more reliable than this sort of hot and cold risk appetite that we've seen in the equity market.
So does this payrolls number, does it kind of throw water on the idea that, you know, and Taylor, we talked about this a little earlier, that we are already in a recession, or we're in a recession at this point? I mean, you just do not see payroll numbers like this month after month in a recessionary environment.
Yeah, I don't think you get it when you've payrolls this strong. And I think actually, I'll give credit where credit is due. Sometimes I don't always like to do that, but everyone had been saying that there was a Federal Reserve pivot a few weeks ago, and I think that they've actually been very consistent in watching the data. The markets have been talking about a pivot, but I think all of the Fed officials that have been coming out have said that we're still looking at whatever, 50 or 75, and I don't think anyone was being dovish.
Well, but you don't see that reflected in the equity trade, right?
Yeah, it feels like if you look at the equity market, the fact that we're flat on the week for the S&P 500, that feels like Fed fighting to me, even though Fed officials have come out and basically screamed from the rooftops that we're still going.
Yeah, and that is just, again, it's going to crush the bond market because you raise rates, all the bonds are worth less, and then that's going to upset the equity market. And again, it's sort of, this whole thing is just the inverse of what we saw the whole last decade. When the 60 and the 40 went up together, kind of stands to reason they'll go down together for a while as long as the Fed has this inflation fighting mandate.
You know, I love following the quants around. The whole idea here that commodities can be a hedge to all of this. Commodities can be the great diversifier to that 60-40 portfolio. That is what Cliff Asness will tell you. Commodities are now starting to come under more pressure too.
I hope he's watching.
Yeah, how's Bitcoin is our great diversifier, Tim.
I didn't hear what you said, Taylor. Was it about Bitcoin?
Yes.
Okay, I assumed.
But that's only because Caroline's not here today.
All right, we're going to see you guys in just a few. That is going to do it for our cross-platform coverage. We'll be back here at 4 p.m. for our Beyond the Bell coverage. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld. We're live in the Bloomberg Interactive Broker Studio. Katie, will you please go back to that tweet that you sent earlier this morning?
Oh my God!
So I just have to describe this to you guys because Kate, so I'm sitting here at my desk just before 10 o'clock this morning, digging into the jobs report, and Katie comes running upstairs. She's in this like amazing mood, and I'm like, Katie, what is going on? And she said, I'm so excited. It's jobs day.
Yeah.
And we get to talk about it.
Yeah.
And I'm like, you're right. And you told me about this tweet that you had sent, which I thought made a really good point. And you kind of referred to it just now.
Okay.
When we were...
the tweet is, okay, we're not in a recession. I want to get into this in the 4 p.m. We're not in a recession now, perhaps. But the reason why good news is bad news, and I hate that phrase, is because, I mean, this isn't what the Fed wants to see. This just means they're going to have to hike more for longer to get things under control. When you think about them trying to crush demand or cool off demand is maybe a more polite way to say it. So this ultimately just means that there's economic pain to come.
Yeah, and that's what I was getting at with Mike McKee, my question to Mike McKee earlier. And he made the good point that, look, yes, you're right, it's kind of a puzzling equity market reaction. He said, you know, a lot of traders are in the Hamptons today.
Yeah,
but there's also a lot of data that comes between now and September. We also do hear later this month from Fed officials when they're in Jackson Hole. So there's a lot that can happen between now and then, but for now, this is not what the Fed wants to see.
And you know that Mike McKee is probably going to be in Jackson Hole with an amazing hat. I don't know. I
He's
just picture him on horseback.
I want him to is he going to let, like, I'll just go, I'll carry his luggage.
Yeah.
I'll go there. He's going to be, you know, fly fishing if he has time to do it. Hey, and look what Becky Frankowitz told us from Manpower Group. She said, we're not seeing any softening right now.
That's the thing.
Leisure,
was there
hospitality,
anything in this
tech,
data to suggest that the data
even
we get
tech,
between...
where we've seen anecdotal examples of layoffs, like Robinhood laying off, you know, 30% of the company.
So when you think about the data still left to come between now and the next meeting, is there anything to suggest that it's going to cool? Probably not.
This is why you're so excited today, because we get to talk about this. It's good stuff. You're listening to a Bloomberg Business Week, and this is Bloomberg Radio. Let's get to Washington, D.C. now for World and National News with Nancy Lyons. Hey, Nance.
Thanks, Tim. U.S. employers added 528,000 jobs last month, and the unemployment rate fell to a 5-decade low of 3.5%.
The employment numbers were welcomed at the White House by Labor Secretary Marty Walsh.
This certainly is a great jobs report. Most of the economy is recovered. The jobs companies had pre-pandemic are all returned. We've showed some good wage growth. Where we are today was really incredible, and I think that will be sustainable moving forward.
Manufacturing jobs were also on the upswing, Walsh noted in a Bloomberg interview, and will expand further, he said, when chips and other advanced production expands in the United States. In Washington, Irv Chapman, Bloomberg Radio.
Gas prices continue to fall, with the gas station in Oklahoma City the first in the nation to sell regular unleaded for less than $3 a gallon. Nationwide, drivers are paying about $1 less per gallon than at the peak on June 14th. A last-minute deal has been reached on President Biden's tax and spending bill. Arizona Senator Kyrsten Sinema forced revisions like the elimination of the carried interest tax break, but fellow Senator Mark Warner says he'll keep working with her to come up with something later. For now, Senator Warner tells Bloomberg this is a better bill than when it was first introduced.
It does a meaningful down payment on debt reduction. It finally allows us to negotiate drug prices the way other countries do and bring down the cost of drugs. It has, and a lot of this credit goes to Joe Manchin. It has a major move towards greener energy, but it realizes we got to have a transition.
Again, Senator Mark Warner, a vote on the package could come this weekend. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. I see the name Justin Timberlake in a headline, and I'm going to click, Katie.
Why?
Because
Do you love
JT.
him?
You know,
You're a
there was
huge
that album.
NSYNC fan?
No. It was his
You love
solo
his
career.
movies?
No, that first album, that first big album that came out, I think it was like 2008, maybe.
Uh-huh.
I don't know. You were pretty young. Do you remember it?
I was I was conscious.
All right, let's talk about the story.
Do you want to? We can talk about Justin Timberlake.
Royalties for Justin Timberlake is helping back a $222 million worth of bonds. We're talking about Hypnosis Song Management, counting on chart-topping hits from the likes of Justin Timberlake, Nelly Furtado, Leonard Cohen, to entice investors to its first ever music royalty-backed bond offering.
Well, this is kind of fun. So the securitization will repackage royalty payments, including publishing and sound recording rights from a catalog of music by several high-profile singers and songwriters. The collection spans over 950 songs. It's valued at $341 million. That is according to a Kroll bond rating agency pre-sale report.
KBRA has assigned the bonds a preliminary rating of A-, citing an experienced management team at London-based Hypnosis, and the multiple administrators for the collection, such as Sony Music, Universal Music, and Warner. The top song in the catalog is Cohen's widely covered Hallelujah. That's according to KBRA. You've heard the Jeff Buckley version, I'm sure.
Yeah, it was in Shrek, right?
Yeah, it was. It was also. It's also around way before Shrek. That was a great song.
Yeah.
It's interesting because we're seeing so much interest when it comes to royalties, right? And you see a lot of musicians really at the end of their careers. Well, I don't want to say end, late in their careers,
Right.
selling the rights to their music.
Right. Yeah, it is interesting. Was it the song Mirrors that you liked, the 2020 experience?
No. It was like way before that.
Oh,
yeah,
man.
way before that. We're
I
gonna have
loved
to do
Mirrors.
some
Oh,
Googling.
that
Maybe
came out-
2007.
Wow.
It was a long time ago. Yeah, it was a long time ago. Check out this story. It's by Tarisha Sheets on the Bloomberg Terminal. You're listening to Bloomberg Business Week on Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Jobs Friday, choppy session. We've got the Dow back in the green right now, just about 43 minutes to go ahead of the closing bell. S&P, NASDAQ, they do remain lower, but let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks well off their opening lows, like you had said. Dow's currently up 10 points, was down 237. S&P is still down 17, while the NASDAQ is still off by 104. The U.S. 10-year yield at 2.83%. Gold is down 16. Energy is in the green, and Bitcoin is trading higher by 1.4%. Among the main 11 S&P sectors, only energy, financials, and materials were in the green, and leaders to the upside in the Dow, J.P. Morgan, Chevron, and Goldman Sachs. Disney and Cisco led to the downside. After earnings, Monster Beverage fell 5%, and in deal news, Amazon to buy iRobot for $1.65 billion, and Pfizer is in talks to buy Global Blood for about $5 billion. Wrapping things up, the hot non-farms payroll number came in at 528,000 versus estimates of 250,000. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill, and to hear live breaking news over your Bloomberg type squawk. SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you so much, Charlie. Let's get to Ben Armstrong. You might know him better as BitBoy Crypto. That's how you can find him online. He joins us now on the phone from Atlanta. Great to have you with us. I don't even know where to start when it comes to cryptocurrencies lately. The crypto industry as a whole, it feels like we've seen a lot of headlines. I guess I want to start with Coinbase because a few weeks ago, you had a Bloomberg News report that basically it was facing a probe from the SEC. That was according to people familiar. Then you get to this week, we have breaking news that BlackRock and Coinbase are teaming up basically to extend access to crypto, to Bitcoin specifically, to institutional investors. And I guess I want to start there. I mean, when you look at a stock like Coinbase and consider what's going on sort of in the macroeconomic environment, where does that leave you?
Yeah, so all this information has been extremely interesting. It's been trickling out over the last few weeks. Obviously, we got some news yesterday from an unnamed staffer from Cynthia Lummis's office that basically all U.S. crypto exchanges are kind of being investigated right now. So obviously, Coinbase would be included in that. There's a case going on of insider trading involving the head of product, who's basically the same position that the insider trader from OpenSea was, where this guy insider traded, a ton of different coins he knew was going to get listed along with some friends and a brother. And the SEC is using that to maybe go after some coins on a back end to call them securities on Coinbase. So now we've got that going on. And now at this point, BlackRock come into space. And of course, David Marcus, Meta came out and supported the whole thing, great partnership between, BlackRock and Coinbase. I'm a philosophical guy. So from my perspective, I don't it's great maybe financially for crypto that you have access to this. But, the way that traditional finance, they can't beat crypto, so they got to join it. And so we're letting, these big funds come into the space and really have too much say. And the thing that's really interesting here, when you look at the timing of this partnership along with the SEC case, and I've actually known for several months about a lot of these cases. They were sending out letters because I had contacted a crypto exchange that told me that so many of these exchanges have been receiving them. So I kind of knew this was coming. But the interesting thing is, is this actually a play where BlackRock is getting behind some of this, and they are actually going to be using Coinbase as a smokescreen to attack some of these other exchanges in order to get Coinbase to get further ahead? I think that's something, to definitely look at here. So is it going to be great financially for the Coinbase stock price? Yeah, of course it's going to be. Is it overall good for crypto? I don't think so.
Why not? I don't get that, because it just seems to me, we talked about this yesterday on air, and perhaps this is why we saw the stock move, but it seems to me like it's a legitimization for Coinbase's business. If you got BlackRock coming in here partnering, Meta, you can say,
BlackRock, theoretically, they could sort of build their own thing. Like, why do they need to partner with Coinbase?
Exactly. This is like something good for Coin, right? Right, Ben?
Well, I would tend to say that what this could potentially be about, I know it sounds crazy and off the wall, digital dollar, right? So we know BlackRock has its hands in everything. We know that Circle backs USDC. Well, USDC is also backed by Coinbase. They're the ones who created it, and then Circle came in and backed it. So that's the play here, in my opinion. When you look at stablecoin regulation coming down in the future, you're going to see a lot of these stablecoins go, especially the algorithmic ones are going to have a lot of problems. But there's so much value and so much money in potentially owning the thing that will become the digital dollar for the United States. And I've always said, since Circle got involved, that USDC is the most logical. Jerome Powell came out
over Tether.
I hope that's a joke. Over Tether. Tether has no shot to be the U.S. digital dollar. There's a lot of problems there. I don't think it's going to collapse or anything, but you have American companies, Goldman Sachs, all of these are getting behind USDC, and there seems to be a reason. Jerome Powell in 2020, what actually kicked off the Bitcoin bull run after the halving, it went sideways for a long time. It dropped, it went sideways, was when Jerome Powell came out and said, we're actually considering using private business to build the digital dollar as a potential. They're willing to work with them, and that's exactly what USDC is. It's like this has been set up for a few years now, and that's really what I think. Now, the logistics of how in and out that it works, I'm not 100% sure, but I do think that just as a person that thinks BlackRock is the devil, they have their hand in everything, they control everything, they have a board seat everywhere, they leverage other people's money to get board positions to be able to direct companies, and that's the exact opposite of what we want in crypto. We want a more free system, not a more.
So Ben, we only have 45 seconds left, but the idea that USDC could become the digital dollar, why wouldn't the Fed want to create their own digital dollar and have that be the digital currency of choice? Why would they want to sort of give up control in that way or allow that to happen?
Well, I think it's just you have the overlap of a lot of private businesses here, like Coinbase. Well, I mean, technically it's a public business, but the private sector, where you have a lot of these companies that have already built infrastructure. There's no reason, why would Swift do their own network, that would upgrade the network of information that they have? Well, XRP and Ripple have already built it. So it wouldn't make sense for banks to leverage the technology. Government's the same way. They're not, and I want to be clear about this, if USDC does go on to become the digital dollar, it's going to look a lot different than it looks now. The government is going to have control. It'll probably be moved to it won't be open source. It won't be private.
Right.
Maybe everything won't be transparent. The government's going to take it and adapt it. Why would they not leverage, especially when Jerome Powell said they were already willing to do that?
Ben Armstrong, founder of BitBoy Crypto. Got to leave it there. Ben, really appreciate you taking the time. Ben joining us on the phone from Atlanta. You're listening to a Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week, and we've got some news for HBO Max subscribers. Starting next summer, you're going to see a combined HBO Max and Discovery Plus. It's going to be one service. Investors not so happy about a big strategy shift and a miss for Warner Brothers Discovery. We're going to have the details from our own Martin Pierce at Bloomberg Opinion right after this. First, though, Charlie Pellet, we got less than a half hour to go with the trading week.
Indeed, and we are up for the Dow, lower on the S&P, lower for NASDAQ. However, we could see a third straight week of gains, Tim, with the S&P on the week so far up by 0.1%. Right to the numbers, we'll give you the why. Hey, it's Jobs Friday. We've got the S&P down 16, now down 0.4%. The Dow up 16, a gain there of about 0.1%. NASDAQ on the minus side, down 99, a drop now of just about 0.8%. 10-year yield, 2.82%. The 2-year yield, 3.24%. Treasuries sank after data showed a booming labor market that might prompt the Federal Reserve to raise rates sharply at its next meeting. Tiffany Wilding is chief U.S. economist at PIMCO.
What the focus is on is really recalibrating to where we need to be, which is in restrictive territory. So that's why we think Federal Reserve officials are probably also going to do another 75 basis point rate hike at the September meeting. But ultimately, eventually, they will slow the pace of those adjustments down. But as they get closer to kind of where they think they need to be on the restrictive side.
Investors are speculating that the threat of recession has receded enough that corporate earnings can remain robust. Today, we have got gold down 0.9%, 17.74 the ounce. West Texas Intermediate crude down 0.3, 88.28 a barrel on WTI. That 10-year again, 2.82%. After earnings, DraftKings shares up 9.5%. DraftKings raised its full-year revenue forecast as the company continued to sign up new bettors despite decades-high inflation squeezing consumer budgets. Again, recapping stocks mix, the Dow higher, S&P, NASDAQ, they are lower. S&P right now down by 14, lower by 0.4%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. A quick redhead crossing the Bloomberg terminal. Oracle is laying off hundreds of employees, this according to Dow Jones. These employees are in healthcare, IT, cloud business. We should note, according to filings, Oracle has about 143,000 employees, so hundreds is not so big in that context. Do you want to get to our next guest in the context of media? Shares of Warner Brothers Discovery are having their worst day ever. To be fair, the combined company's only been trading since April, but still it's down about 16% right now. The company did post a quarter that fell well short of estimates, but it's a strategy shift that's got the attention of our next guest. Bloomberg Opinion's Martin Pierce joins us now. Martin's covered media for years. He was deputy editor of the Wall Street Journal's Heard on the Street column. He was managing editor of The Information, but we are very glad to have him here at Bloomberg Opinion. Martin, this strategy shift, no longer making movies just to release them on streaming, combining HBO Max and Discovery Plus into one service next summer, is this making you think of what's new is old? I mean, or what's old is new again? This seems like legacy TV stuff here.
Exactly. I think that David Zaslav, who runs the company, would like to get in a machine and return to the 1980s. Look, I think that the reason that Wall Street is not impressed is that his ambition is just not, I mean, his plans are just not that ambitious. I mean, if you look at the amount of money he expects to make from streaming, it's a small amount relative to how much money he makes from cable, and that is a declining business. So I think people are disappointed. He's not really. He's just trying to sort of. I'm not sure, but he's not really trying to exactly hit any home runs here.
And so, I mean, sort of boil this down for me. What does this mean if I'm a subscriber? Is streaming going to cost more?
Yes, he has said, he was very clear that he plans to raise prices.
I guess the question, Martin, is in the context of what happens. It's been, look, I don't need to tell you. I mean, you've been covering this stuff for a long time. You've been watching it so closely. Look at what Netflix has done this year. It's been a disaster for the company, certainly a reset for the company. Does news like this, does it make Netflix say, wait a second, this is okay? The legacy media companies aren't going to be challenging us at our own games in the way that we thought they would.
I think that's right. I think that there's no doubt that Netflix thinks this is good for us. The issue is, though, that Netflix hasn't yet proved that it can actually make money from streaming either. So Zaslav is looking at them and saying, why do I want to follow their strategy? But I think the answer is that television cannot really be as profitable as it has been in the past, and Zaslav just hasn't sort of come to terms with that.
Yeah, I mean it's where we are, right? I mean, this is something we're not in the 1980s or the 1990s anymore. I mean, media consumption is completely different than when cable was invented. Martin, I want to go back to the axing of CNN Plus, and I'm wondering if the writing was kind of on the wall for this strategy shift when we saw that happen.
I think so. I mean, I think that indicated that they were not that ambitious, but you could also argue that that was not a particularly good idea. So I think that that's a harder one. I think that the issue with this HBO Max Discovery Plus combination is, firstly, they're not going to call it HBO. They will retain the HBO brand, but they're talking about having a completely different name, which I think is a bit strange, given that the HBO brand is very well known. And I'm also not sure whether, HBO stood for quality programming. Now you're going to put all the sort of reality programming from Discovery onto this service. It'll be a mix of things. I think it will really erode the value of that brand.
Okay, so 30 seconds left, Martin. I mean, if you're Richard Plepler, we go back, years to go back and think about what he created at HBO. What are you thinking right now?
He is producing shows for Apple, which I think has sort of stolen the HBO, approach. So I think he's just laughing.
That's interesting. Yeah, I mean, we do see the rise of premium content on Apple. I think where they do lack, though, is when it comes to this big library. But you're absolutely right, seeing more of the really good stuff on Apple. Going to be really interested to see how this plays out. Martin Pierce, he's a columnist who covers tech and media for Bloomberg Opinion. You'll recognize his name if you've been following the industry. He was at The Information before this, The Wall Street Journal, and more. He joins us on the phone from here in New York City. Really appreciate you taking the time, Martin. Shares of Warner Brothers Discovery right now down by 16.7%. It is having its worst day ever. Once again, it didn't start trading in this combined company until April of this year, so it hasn't been much time, but still a really notable move for the company today. Let's go to Washington, D.C. now for world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. The Senate's budget referee could rule today on Democrats' revised tax and energy spending bill. That's after Arizona's Kyrsten Sinema got the changes she was looking for on the carried interest loophole, a 15% corporate minimum tax, and a new 1% tax on stock buybacks. We learn more from Bloomberg Government's Emily Wilkins.
Democrats are just very much ready to go forward on this one and to do what needs to be done. Remember, just a few weeks ago, they didn't think they were going to get anything from this package. And the fact that you then saw that Schumer-Manchin agreement emerge, and really Senator Kyrsten Sinema was the last piece here.
Bloomberg Government's Emily Wilkins says Democrats hope to win final passage of the bill sometime this weekend. President Biden is taking a victory lap after today's jobs numbers show employers added 528,000 jobs last month. That was way more than analysts predicted.
Today, there are more people working in America than before the pandemic began. In fact, there are more people working in America than any point in American history.
Biden reassured families today that the economy is recovering, even if they don't see it yet. An economist says conspiracy theorist Alex Jones and his company are worth up to $270 million. The testimony came today in front of a jury that's trying to determine if Jones should have to pay punitive damages to the family of a 6-year-old killed in the 2012 mass shooting at Sandy Hook Elementary School. The same jury yesterday ordered Jones to pay another family $4.1 million in compensation for spreading lies about the shooting. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stanovic and Katie Greifeld were live in the Bloomberg Interactive Broker Studio here in New York. Katie, we got a great story to get to on the Bloomberg terminal. Sent this one out this morning. I saw it, read the story, saw that headline, and then I saw who wrote it. It's written by our colleague here. She's a rotator for Bloomberg Radio, and she works so hard on our radio show, Carly Wana, that I was surprised to see that she was also doing reporting still. And I said, Carly, how are you doing this, but also, working full time on the radio show? She's like, the reporting itch. You gotta satisfy the reporting itch.
You gotta scratch it.
Yeah, and she did. Meta, it's all about the parent company of Facebook, has hit pause on its full-time job offers after prized internships.
After prize internships. So Meta told interns via email in early July that it would delay deciding whether to hire them, giving the company extra time to assess staffing needs. That's according to a spokesperson. So far, it's the most prestigious program to change or cancel plans to offer interns full-time jobs. Probably not the last, though, Tim.
Yeah, it's so interesting to see what happens, because we just talked to Becky Frankowitz over at Manpower Group, and she told us, and Caroline mentioned this yesterday when we were on our simulcast. She said, when are we going to start to see the anecdotal examples of layoffs show up from the tech industry in the actual jobs numbers? And Becky Frankowitz making the point today, we're not even seeing softness when it comes to tech. So even though we're seeing these high-profile moves by these companies like Meta Platforms, the parent company of Facebook, like Netflix, a handful of other ones too. Robinhood comes to mind, has laid off a lot of people. Those people seem to be landing. They're not as widespread as they seem based on the payrolls numbers.
We'll see how long. Again, payrolls, of course, are a backwards-looking number. Only by a month, though.
Yeah,
so
only by a month.
We'll see. But in any case, it is interesting to compare and contrast where the graduates of 2021 were.
Yeah.
Things were booming. 2022, it's a different story. It's a different setup.
Check out this story written by Carly Wana for Bloomberg News. It's not just on the Bloomberg terminal. It's also available at Bloomberg.com. You are listening to a Bloomberg Business Week. Tim Stanovic and Katie Greifeld, and this is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell, with the Dow now higher by 64 points. We've got the S&P down 9, little change there, now down by about 0.2%, while NASDAQ is down 76, a drop there of 0.6%. Jobs Friday, Treasury sank after data showed a booming labor market that might prompt the Federal Reserve to raise rates sharply at its next meeting. The strong jobs report validates the Fed's view of a resilient economy that can withstand additional interest rate hikes. Right now, the 10-year yield 2.82%, the 2-year 3.24%, spot gold down 16, down 0.9%, Bitcoin 22,918, Bitcoin up right now by 1.8%, crude is down 0.2%, a barrel of West Texas Intermediate crude right now 88.35 a barrel. So again, recapping equities trading mixed, we've got the Dow higher, S&P, NASDAQ, they are both lower. The S&P down 0.2%, the NASDAQ Composite Index down by 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. House Speaker Nancy Pelosi said she visited Taiwan this week as a show of solidarity. But if the U.S. wants to preserve the status quo in the Taiwan Strait, it should try saying less and doing more. The goal of U.S. policymakers should be to convince Chinese leaders that any invasion of Taiwan would be both unnecessary and unlikely to succeed. So it's critical for the U.S. to shore up its deterrent capability. This means investing in long-range anti-ship missiles and resilient battlefield networks, and working with allies in the region to establish new basing arrangements. All this should be done without fanfare. Chinese leaders will respect changes on the ground more than rhetoric. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg opinion, please go to Bloomberg.com/opinion or OPIN go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It's the Drive to the Close. Wow, hard to believe, Katie. You know, time flies when you're having fun, is what they say. We got less than 10 minutes to go. We just heard the numbers from Charlie Pellet. Kind of a mad day for the S&P 500 right now, just down about 0.1%. Still surprising to me to see an equity market react like this in the face of a blockbuster payrolls report. Really eager to hear what Quincy Crosby has to say. She's chief equity strategist for LPL Financial. Quincy joining us this afternoon on the phone from Charlottesville, Virginia. All right, Quincy, these numbers crossed. We saw sort of a muted S&P 500 reaction, at least. We did see some bigger moves in the NASDAQ today. How should the market be digesting this? I mean, it's just like I'm at a loss for words.
Hello. Yeah, I mean, the market is just perplexed. How do I say this? This number was fantastic. This number shows strength in the economy. The labor market is is the pillar of the economy. It means that Americans can spend more. The wages went up. They have jobs. And in addition to that, we're seeing gasoline prices come down and food prices coming down. That means that the consumer is able to spend more. Of course, that feeds inflation. So that's the other side of the equation that worries the market.
And Quincy, spin this forward for us, because, I mean, the reaction in markets today wasn't huge, except if you're looking at the bond market, definitely yields higher. But just sticking with the equity markets for now, we've been calling it an uninspired trade, but still it seems like the direction of travel is lower. And just square that circle and wrap the Fed in. Why is good news bad news right now?
It's bad news because the Fed, which which was behind the curve to begin with, finds itself needing to raise rates more in order to curtail inflationary pressures. And already, immediately after this number came out, we saw the Fed funds futures market go from about 50 basis points for the next meeting, which, by the way, is at the end of September, to 75 basis points. The currency market, the dollar, moved higher on the back of a potential more aggressive Fed vis-a-vis other central banks. So what this is telling you and telling the Fed is, hey, you know what? The job isn't done. The job is not done. But what it does say and what it does give the Fed is the luxury to raise rates more than the market had initially expected, because at least the labor market is healthy. They have that luxury.
So why aren't we seeing why aren't we seeing stocks get crushed then, if interest rates are going to move higher?
Because the reason is that between now and the Federal Reserve meeting, there is going to be quite a bit more data on inflation.
That's the same answer that Mike McKee gave us earlier today.
Yeah, Mike McKee.
I don't know if you were listening, Quincy, but I asked Mike McKee the same question.
I wanted to listen, but I couldn't.
That's okay. But that's exactly what Mike McKee said. I mean, there's a lot of time between now and the end of September.
Well, exactly. Now, let me mention one thing, though. We have seen the Fed pivot, if you will, and change during the blackout period, the rate hike that was telegraphed from 50 to 75 basis points when they notified the press, so to speak, and said, "Hey, let the market know we're going higher."
That was controversial.
That was controversial, but the Fed's rationale was, look, we didn't want to wait 6 weeks. So we have not seen an inter-meeting rate hike. They don't like to do that, especially if it's, what should I say, negative, in other words, that they would be raising rates. But I think that if they felt, and we won't know until we get these reports on inflation, whether or not they would go ahead and do it and just say, look, this is our job. We are data dependent, and now the data suggests that we have to move more quickly and more aggressively.
So, Quincy, really been asking a lot of our guests this week about if the bottom is in, and I'm curious as to what your thoughts are. Have we seen the bottom?
Well, I know I'm going to equivocate, but there was a bottom. A tradable bottom was certainly in. The market's done fantastically, following the June low, but the bottom is probably not yet in. And one of the things that we look at closely is something that has worked way back. I just go back to 1982 because it was August of 1982. We look to see how many of the S&P 500 stocks can pass their 50-day moving average. And you need to see about 90%. We call it escape velocity. And when it moves quickly, it's decisive, and it's very hard to second guess it.
So in other words, Quincy, we haven't seen the breadth necessary to declare that the bottom is in.
No, we're about 72, 73% of the S&P 500 crossing that 50-day moving average. And by the way, historically, it usually should come about 10 days from about now, if it's going to happen. And you've got a market that's nervous, but I can say this. If the numbers next week come out and they are lower than the market expects, much lower, showing that inflation has pulled back, that the trajectory is clearly down, this market can continue rising.
Oh, interesting. Yeah, that's a good point.
Yeah, man, that'll be, I cannot wait for next week's data. So
I'm going to be on vacation, Katie.
Yeah, but I'll be here.
I know you
and
will.
I'm excited.
Okay, good.
Quincy, we only have about 1 minute left, but let's think about what we heard from the Fed last week, basically saying we're going to drop forward guidance. Does that mean every single top tier economic data point between now and the next Fed meeting is a cause for volatility?
Yes, volatility or celebration. The Fed doesn't want to be caught, for 8 weeks just sitting there telling us, 50 basis points, and then suddenly they've got to be hit with 75. So that they're going to be data dependent, but you know what? So is the market going to be data dependent. And there's an old saying in the market, if you work on the trading floor, and that is the market gets the news first. and the market will sniff it out, and the market will make a decision as to whether or not the Fed really has to go full throttle towards the end of the year. Right now, the Eurodollar futures are saying, yep, the Fed's got to keep going. The Fed Funds futures market is saying, yep, the Fed's got to keep going. But let's look at the data. We have to be data dependent.
Quincy Crosby, really great to have you on the program. Chief Equity Strategist at LPL Financial. Quincy joining us this afternoon on the phone from Charlottesville, Virginia. LPL does have about $1.1 trillion in assets under management. We're about to join our friends at Bloomberg TV for our Beyond the Bell coverage here on Bloomberg. We are seeing in the last 5 days, the S&P 500 up 0.3%.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And about 2 minutes away from the end of that trading day, Taylor Riggs, Sonali Basak, Eric Balchunas, we are still here, and we are still counting you down to the closing bell, here to help take us beyond the bell with our global simulcast. Yes, Eric, our third.
They never stop, Eric.
How many of these are there?
Katie Greifeld, we bringing in our global Bloomberg TV, radio, YouTube audiences now. One day we'll be in the metaverse, right?
Yeah, well,
Aren't we already?
That day has not come yet. I've been asking our guests all week if the bottom is in. Quincy Crosby giving us a pretty good answer just now. She's Chief Equity Strategist at LPL Financial. She said probably not yet. Your market's nervous, but we're not seeing the breadth that we need to see in terms of stocks moving higher, the number of stocks moving higher, the proportion of stocks moving higher in the S&P 500 that she needs to see in order to tell us that the bottom is in.
Maybe markets are nervous. I feel excited when we think about what's ahead. But if you look at today, though, the trade kind of uninspired, like we were talking about. Volume, too, much lower. Turns out it's a Friday in August. I guess everyone's at the beach.
Yeah, we're still marginally higher on the week for the S&P 500. And, you look at some areas that are still in the green, the Russell 2000 today. It's not all bad news out there, but you've got to worry and wonder about what capitulation looks like and if we've even hit it yet.
Yeah, and you look at the VIX. We've talked about the VIX not really doing much. I think when you talk about the retail investor, they're still buying, and that might give the market some stability. But the VIX ETPs have not seen the jump in volume you tend to see on days where people are freaking out. So I don't really see a lot of fear in the market, at least according to the ETF volume.
Well, and Eric, that's interesting. Jason Draho was just talking about that it's really interesting to see a little bit of some downside movement here without sort of a full spike up here. That we see within the VIX. Tim, I'll give you some settlement here. We're shaking up the Friday, shaking up the week as well. And S&P, I'm going to call this unch. We're only down 7 points, 0.2%. A Dow that's a little bit positive, you're up 75. And NASDAQ, clearly that's the big underperformer here. You're off about 0.5%. But do expand out, Tim, take a look at this. The clear outperformer, the small cap, domestically focused stocks, the Russell 2000, the big winner, 0.8% higher on the day.
Yeah, taking a deeper look at the S&P 500, Taylor, we saw about, 60 stocks at this point move more advance rather than decline today. We saw 280 advance, 220 decline. So even though we saw the S&P 500 move lower, we saw more stocks move higher on the index.
Interesting that you point that out. We see maybe a similar narrative when you think about sort of the sector levels, a few deep dives underneath sort of the headline index. And Katie, for me, sort of what is green is in green, and how sort of risk on does this feel? Energy, again, up 2.2% on the day. Financials as well, when you think about some of the movements that we've had within the yield curve, at least for now, higher rates is the narrative that banks are holding on to. You come down to the bottom of the screen, I sound like a broken record, Katie. It is big tech, the classic long duration assets without a lot of that cash flow. That's why we call them those long duration assets. Those are the red on the screen. You're off about 1% or so on the day.
Well, let's go back to energy. Let's go back to banks, because that definitely makes up a lot of my movers here. You have Constellation Energy, for example, up 10% today. The stock got an upgrade from UBS. Analysts there see the nuclear production tax credit in the Inflation Reduction Act of 2022 as very likely to pass. Constellation, in that scenario, essentially becomes a long-term contracted asset. That's according to UBS. Shareholders seem to like that. Again, Constellation popping 10%. JP Morgan, 2, huge rally in the banks, as Taylor just walked us through. JP Morgan, no exception, up 3%, just one of several banks rallying today as Treasury yields surged on the day. And I also wanted to highlight Kellogg's because they reported earnings yesterday, beat estimates, Americans still eating cereal. That earned an upgrade from Piper, and that boosted shares by about 1.7%, Tim.
Katie, you missed AMC today.
Oh my
Rallied
gosh.
19%, the most since March. Is it the return of the meme stock?
Did you say that?
Yeah.
Maybe. I mean, we have seen a lot of retail traders out to play today.
Hey, I got the decliners. Let's talk Warner Brothers Discovery, ticker WBD. It's having its worst day ever, but you know what? It's only been trading in the public market since April, down to 16.5%. The company did post a second quarter net loss on sales that fell well short of estimates, but it's a strategy shift. So enjoy HBO Max as it is while you can, because come next year, it's going to combine with Discovery Plus, and yes, it's going to be more expensive. Shares of Amazon, got to check in on those, finishing the day down by 1.2%. Interesting to see the big news this morning that Amazon would buy iRobot. It's the maker of the Roomba vacuum for $1.65 billion. It's pushing into internet-connected home devices and robotics. Perhaps it'll help it map out the homes of people with Roombas, so get a good understanding of what they might want from Amazon. Virgin Galactic, too, got to check in there, finishing the day down by 17.5%, having its worst day in about 6 months. The space tourism company, again, delaying its commercial service, calling for a launch in the second quarter of 2023, so it continues to push that launch out forward.
Maybe instead of the metaverse, we'll be broadcasting live from space.
Sounds more fun than the
tourism.
metaverse.
A girl can dream.
No, never more fun than being at 731 Lexington Avenue, Tim. How
That's
dare
true.
you? Take a look at fun in the bond market today. Yields higher, huge. When you think about 20 basis points here on the 2-year yield, finally back up to a 224. I think interesting, I want to be careful about how much of a big deal I make about a 10-year yield. You're up 14 basis points, but Shelley, we're still at a 283. And I think it's important to remember that at the peak of sort of the rate hiking cycle that we'd gotten, the 10-year was at a 3.25. We now then rallied back down to a 260. So we make a lot of sort of the intraday moves back up to a 283, but I mean, really, we're right sort of in the range that we've been in the last few months or so.
Totally, and you and I are always on the same page on this because you look at the yields and you look at the 210 differential and you look at that deeply inverted yield curve, even more inverted this week. And you think about that big move in the financials that Katie was talking about. Why is the financials benefiting from this? Because they lose billions of dollars when the yield curve is inverted that deeply, as well as a potential recessionary signal that could also hurt a sector like that that's considered defensive.
You know what's interesting? Tim, sorry to interrupt.
That's okay. Go for it.
But, you know, in terms of thinking about the yield curve and the fact that, you know, you've seen short-end yields rise so much more, theoretically that being bad for banks, I don't know. If you think about the corporate issues that we've seen, it feels like companies are going longer and longer out the curve to borrow. If you think about Meta, if you think about Apple, 40-year securities. So a little bit of a trend I noticed.
Yeah, a lot of notable moves to the bond market this week on the corporate side. Hey, I want to talk a little about inflation and move to next week because we get that CPI print. And Taylor, you mentioned still set to be pretty hot at what, over 8.7%, 8.8% at this point. Quincy Crosby over at LPL Financial, she said, okay, we're starting to see food prices come down. We're starting to see oil prices come down. Gas prices down for what, 50 days in a row at this point. If that number comes in below what the market thinks, then we could continue to see a risk on day when it comes to stocks.
And I want to go back to bonds real quick. You know, you talk about the short end of the curve. For the past 3 months, people have been selling their short-term bond ETFs and going to the longer part of the curve. You know, that phrase duration rotation, I think, is back in play.
I've heard you say that a few times.
You like it, I know. You've stolen it,
Well,
actually.
it rhymes.
But I'm okay with it. Because I didn't invent it.
Eric, what are we gleaning, though, from the flows that you've been tracking in and out of bond funds?
Well, if you're on the short end, that's right where the Fed is raising. So it's almost like I get people scramming out of there. But people are interested in getting protection, and treasuries are a safe place to go. But in July, people left treasuries and went to risk assets. But I bet we're going to see them come back to treasuries, you know, as they have been doing all year, minus July.
I'm going to give a little bit of a teaser here because I know we have some scoopage coming out on Monday because there is a floor here. There is some support to higher risk assets, big buyers who are coming in to those credit risk assets, the high yield market in particular. I know, Taylor, you and I have been talking about that a lot too, that there's been support there. Spreads have not widened like crazy, and there seems to be more support ahead.
We're finding support in crypto, Katie.
Maybe we are, though. It is interesting to see Bitcoin rallying today, holding on to gains. I know you called the S&P 500 on 0.2% lower, but to see maybe a little bit of divergence between crypto moving in lockstep with equities, I don't know. I've heard one day doesn't make a trend, so we'll see.
Yeah, Bitcoin right now, 22,883, so up 1.6%. But Shanali, like Taylor said earlier, this doesn't close for the weekend, so we might see some big moves on the weekend.
You know what makes me laugh a little? Coinbase has added like $6 billion to its market value this week alone, almost $7 billion. And it was with the support of BlackRock, which has lost several $1 trillion in assets under management this year. So it looks like all the players are banding together to make it through this cycle.
We push forward to Coinbase earnings next week, Tim, Disney, as well as the CPI report as well.
All right, it continues. In the meantime, have a great weekend, everyone. That is going to do it for our cross-platform coverage for the day. Don't worry, Eric, this is the last simulcast. Have a great weekend, everyone.
I actually like
We'll
them.
see you same time, same place on Monday.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld. We're live in the Bloomberg Interactive Brokers studio in New York. Katie, what a week.
What a week. And you're off next week.
I'm off next week.
You're missing a lot,
I know, I'm
man.
missing a lot of earnings.
What do you do on vacation? Do you tune in?
Some days, yeah. Tune in the morning.
Okay.
Catch up a little bit.
You should watch ETF IQ on Monday.
I always watch ETF.
That is not true.
How do you know? Because sometimes I
Because sometimes
accidentally
you
send you
text
chats.
me during the show, and I always find that a little insulting. But
Okay.
you should watch on Monday.
Why?
We have a huge guest.
Are you gonna? Is that the tease, or is you gonna tell us who the guest is?
I was getting
Are you
there.
allowed to?
Kathy Wood,
Oh, nice.
ARK Investment Management CEO and founder, is joining us.
That's gonna be great.
I hope so. She's joining
Yeah.
us for the entire half hour.
Oh, that's gonna be. I will watch that.
Really?
Absolutely. Yeah. Really interested to hear her thoughts on Coin because she got out of Coin, right?
I know, she did. She sold before this latest rally,
Wow.
so going to be curious to check in on that and some of the other big stocks in her portfolio.
It's on Bloomberg TV on Monday at
1 p.m. Eastern.
1 p.m. Wall Street time.
Eric Balchunas is there.
Okay, perfect. We're looking forward to that. Let's get to Washington, D.C. now for world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. President Biden says today's jobs report showing the country gaining 528,000 new jobs last month is not being felt by everyone, but he says it is a sign the economy is recovering thanks to his policies.
America's a nation that was built on work. We can never lose sight of that. That's why the strength and pace of our job recovery is so important.
Biden says there are more people working right now than in any period in U.S. history. The U.S. Senate will spend the weekend on the Democratic climate, health care, and tax bill. We get more from Bloomberg's Irv Chapman.
Democratic leader Chuck Schumer celebrated the compromise.
This is a very, very, very big deal. Reducing prescription drug costs, fighting climate change, closing tax loopholes exploited by big corporations and the wealthy, and reducing the deficit.
Senator John Barrasso led the Republican attack.
There's the climate slush funds. And then there's all these subsidies for electric vehicles. Inflation is eating into people's paychecks. The Democrats are going to make it worse.
Democrat Kyrsten Sinema held out to replace the tax on private equity with a tax on stock buybacks. In Washington, Irv Chapman, Bloomberg Radio.
Secretary of State Antony Blinken and Russian Foreign Minister Sergei Lavrov say they're willing to talk about a prisoner swap involving WNBA star Brittany Griner and another jailed American. The diplomat spoke on the sidelines of a meeting in Cambodia a day after a Moscow court sentenced Griner to 9 years in prison on drug charges. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenovic and Katie Greifeld were live in the Bloomberg Interactive Brokers studio. Katie, what is Amazon going to do with a Roomba?
It's a good question. We know they're going to buy it.
Yeah, the company behind Roomba, iRobot,
Yeah.
Amazon shelling out $1.65 billion for it.
Do you have a Roomba?
We have a knockoff Roomba.
Oh, nice.
Yeah, it's like another company.
How much do
Maybe it's even
Roombas
not
go
Maybe it's
for?
not even a knockoff. I don't know. It's like a Roomba type of thing.
Does it say?
It's called a Eufy.
That sounds like a
EUPHY,
knockoff if it's not called Roomba.
Yeah, it's tough with kid and toys.
Is it?
For a Roomba to work well. You don't have one, right? Because you have a cat. That'd be tough.
I do have a cat.
Do you
No, I
guys
feel
have-
like Cat would like it, and it would be Cat's friend.
You don't have a Roomba though.
I don't have a Roomba. How much don't they cost a lot of money?
I think they're like $400 or $500. Yeah.
What?
I think so.
I was thinking like 70. That is so much money.
Okay, I'm gonna look them up while you talk about this story.
Okay,
'cause
let's
I
talk
gotta
about
get to
this
the
story.
bottom of this.
So Amazon, it's going to buy iRobot, of course, the maker of the Roomba, for about $1.65 billion. That comes out to about $61 a share in cash. This according to a statement on Friday. So this represents a 22% premium based on the last closing price of iRobot before the announcement. And the deal arrives just 2 weeks after Amazon said it was buying up a chain of doctors' offices and suggests that Amazon is forging ahead with acquisitions despite, of course, growing scrutiny of Amazon's market power from antitrust regulators in both the U.S. and Europe, Tim.
Okay, there's a real range of Roombas
tell
that
me.
you can buy. So they range from $250 to all the way up to $600 to $800.
That
There's
is
even a $1,000
ridiculous.
self-emptying robot vacuum.
Self-emptying, what does
Yeah.
that mean? Is
I
it
don't know.
autonomous?
It collects the dust and then it goes over and dumps the dust into this kind of trash can.
It just
thing.
like vomits the dust into a trash can? I would actually love
I've
to see
enjoyed
that.
anchoring radio with you. I hope you still get to anchor radio with me.
This is so fun. Don't
it
kick
is
me
fun.
off.
I have no control over the situation. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Stocks notched a weekly gain after that surprisingly strong jobs report eased recession fears, but cleared the path for the Federal Reserve to raise rates sharply at its next meeting. Now, for the week, the S&P was up 0.4%. Today, the S&P fell 6 points. It was down 0.2%. The Dow, which had a losing week, today was higher by 76 points, up 0.2%. NASDAQ up for a third week. Today it fell 62 points, down by just about 0.5%. 10-year yield 2.82%. The 2-year yield 3.23%. Spot gold down 0.9%. 17.74 the ounce, while West Texas Intermediate crude today down 0.1%, 88.41 a barrel. So again, recapping here, turned out to be a mixed Friday, a jobs Friday. S&P, NASDAQ lower, the Dow higher. S&P today down 6, down 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, we got to talk cybersecurity here because it seems like each and every week we're hearing about some new hack or some new vulnerability when it comes to software that we've been using. And it's not really the type of thing that's fading into the background right now. We got to be vigilant about it. But what happens when you can't actually find enough cybersecurity employees to fill all the roles out there? We got Ryan Lassalle joining us, Senior Managing Director at Accenture Security. Ryan, great to have you with us this afternoon. How are you?
Great, Tim. How are you?
Doing pretty well. So what's the landscape look like right now from Accenture's point of view? I want to get to the employment element about this in just a second, but you know, if we think about all the stories we've seen when it comes to cybersecurity, whether it's ransomware or cryptocurrency hacks, exchanges or bridges being hacked, I got to tell you, from a layperson's perspective like me, it seems like we are always a step behind the bad actors.
Well, we definitely see that the environment continues to get more contested every day. I mean, the attackers keep innovating. We have to innovate to stay ahead of them. And a lot of what we do at Accenture is try to figure out ways to help companies and agencies stay out ahead of the attackers.
And so, I mean, with that in mind, I feel like a lot of people know that cybersecurity is so hot right now. And with that context, I mean, how is it even a struggle to find workers in this industry?
Yeah, I think this is a market that those of us in security have always thought cyber was hot. So we're glad that the rest of the world has kind of come around to that. But I think the market in general is short on talent, and we're short on talent in lots of different areas. But cybersecurity is one where we have 700,000 more roles in the U.S. than we have people to fill.
That's crazy. That number is crazy to me. You have 700,000 vacant cybersecurity positions, 700,000 more roles.
Listen, if I had any skills at all, I would work in cybersecurity. It seems like a great place.
You got skills,
No,
Katie?
I literally just talk, but in any case.
Well, here's the problem. You and I were liberal arts majors.
Yeah,
So this is what we do,
too
okay?
great.
We're
That's not a problem. That is not a
It's
problem.
not?
You'd hire us?
I have great liberal arts majors working in my organization today. We have great anthropologists and social scientists.
Yeah, but they can probably do arithmetic, Ryan.
It doesn't require math. It does require being able to talk to humans and think about risk and think about how different parts of your business or your customer base are at risk. So it doesn't always require math.
Okay, let's put that number though, 700,000. I still can't get beyond that into context here. We had 528,000 jobs added to payrolls for the month of July here. So that was a huge month. Some might say it was a blockbuster month. And if we have 700,000 just cybersecurity positions open, how do we ever fill them?
Yeah, I think we have to get creative, right? I think the whole point about the market is you can't think about it in terms of the constraints we've put on it, whether it's the way we've described the kinds of positions we're looking for, or the way we've over-credentialized the requirements for bringing those people into those roles, or even thinking about how we train on the job to make sure that we have great places where people can grow into the career and not have to have 5 years of experience to get an entry-level role.
Mm-hmm. And I mean, that sort of ties into what I'm wondering is how do you find those workers? Is this the fact that there's 700,000 jobs? I know Tim was blown away by that. I know a lot of people would be. Is it just people not knowing that there is almost a shortage of sorts going on in the cybersecurity industry?
Well, I think security is a career space that is full of lots of lingo and jargon, and it's a little bit mysterious to people who aren't in security. Even how we started talking about hackers, I think that there's a supposition that you have to be really technical to be in this space, and so that automatically creates a barrier to people getting excited about careers in security. We have to figure out how to make it more approachable, demystify it, and then we have to go get people excited about it. Whether it's even in the elementary schools and in high schools, we need to keep getting people excited about security, not just as a technical career, but as a whole discipline.
What about when it comes to immigration, Ryan? Because I wonder just to what extent these jobs, if we can't find people here in the U.S. I mean, I'm wondering what you think about not necessarily changing immigration laws, but we hear so much about the way that tech companies really need to find people from around the world to come work here.
Yeah. So first, it is a global problem, but that job shortage we have in the U.S. is, as you look at the global problem, it's the number goes up. It's even bigger, and clearly, some of the best innovators in our community have come from all over the world. If you look at some of the names and leaders, they come from all kinds of backgrounds, and so we do have to have a pretty big tent, both in terms of the national origins of these folks, but also the skill sets that they're bringing to bear. Because security isn't one discipline; it's a really broad set of skills, from risk down to technology and everywhere in between.
All right, Ryan, we got 40 seconds left. Give us, in the last 40 seconds that we have, a couple tips about how we can stay more secure online.
Well, the first is that you've got to have a good imagination. You have to think about what an attacker wants to do and what they want to get from you. They want your passwords because they want access to your materials. So a great way to stay safe online is to use a password manager and really truly have different passwords for all the different sites and banks and things you engage with, but use a password manager to make it manageable for you. You want to make it harder for them to guess, and so you need that multi-factor authentication that your mail service allows you to use, or your social media allows you to use. It makes it a lot harder for them to get what they want.
Two great tips. Yeah, really appreciate that. Yeah, two-factor authentication, really important, and that unique password, another really important one. Managing Director at Accenture Security joining.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld were live in the Bloomberg Interactive Brokers Studio. How about some hospitality, Katie, to finish the day?
How about it?
All right. Yeah, we're looking forward to that. We're going to round out the program. We're talking to Todd English, Master Chef and Partner over at English Hospitality Group, as well as Keith Burkhardt, Chief of Staff at English Hospitality Group. Going to learn about the industry and how it's changed in the last couple of years. So looking forward to that. But Charlie Pellet, let's get an update from you because a lot happened in the after hours.
Indeed, and investors, though, were spending the day digesting that jobs report. The U.S. economy added more than 500,000 jobs in July. The unemployment rate reached a 5-decade low. The report suggests the labor market does remain rock solid, even as economic output moderates. Today, we had the Dow Jones Industrial Average up 76 points, a gain of about 0.2%. The S&P fell 6, down by 0.2. NASDAQ down 63, a drop there of 0.5%. So it turned out to be a mixed Friday, a jobs Friday. The 10-year yield 2.82%, the 2-year yield 3.24%. Quincy Crosby is chief equity strategist at LPL Financial Group, and she was our guest right here on Bloomberg Business Week.
This number shows strength in the economy. The labor market is is the pillar of the economy. It means that Americans can spend more. The wages went up. They have jobs. And in addition to that, we're seeing gasoline prices come down and food prices coming down. That means that the consumer is able to spend more. Of course, that feeds inflation. So that's the other side of the equation that worries the market.
After hours, we learned Twitter subpoenaed an official of a trust controlled by Oracle founder Larry Ellison that committed $1 billion to Elon Musk's proposed $44 billion buyout of the social media company. 10-year yield, as I mentioned today, 2.82%. Spot gold down $16 the ounce, down 0.9%. West Texas Intermediate crude was down 0.3%, 88.42 a barrel. Turned out to be an up week for the S&P 500 index, 3 in a row. The Dow this week down by 0.1%. NASDAQ had a big week this week, advancing by 2.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you so much, Charlie. Let's get a read on the state of the hospitality industry. And we have the two perfect guests to do that with. We're joined by Todd English. He is Master Chef and Partner of the English Hospitality Group. Also with us is Keith Burkhardt. He is Chief of Staff over at the English Hospitality Group. Of course, it's a leading global operator, owner, and developer of restaurants, hotels, and nightlife venues. Great to have you both with us. And Todd, I want to start with you because I see in your notes that you're abandoning the traditional hospitality business model. What does that mean?
Well, I think we have to, just sort of in all my years of going through the business of restaurants and owning small restaurants and then being involved with hotels and casinos and various aspects of how people dine in these various venues, I think what you're seeing in many ways is a shift in sort of the expectations of the customer. Certainly, they're pent up right now, especially coming out of pandemic, because they're pent up need to be out and be social and get out of the house. And I think maybe there's even more of an appreciation for what restaurants are doing today in the hospitality industry because, when people had to sit around for a year or 2 years without being able to go out, I think they realized, wow, we really missed this part, and we are these gregarious creatures that need to go out and socialize.
Yeah, I hear that. Hey, I should know, Todd is joining us on the phone from L.A. Keith, you're joining us from Thailand. So, Keith, we really appreciate you staying up late to join us here on Bloomberg Business Week. Come on in here, Keith Burkhardt. You are Chief of Staff at English Hospitality Group. And weigh in on what you were just hearing from Todd, because I want to hear how the landscape looks right now as we are all satisfying that pent-up demand to get out there. Because, hey, as we learned today, it's still pretty hard to find employees out there for these properties.
Yeah, I would say that's one of the biggest challenges right now in hospitality, and that goes for all, top-tier hospitality groups, not just specific to certain ones, but really identifying what your strengths are in whatever hospitality venture you have. You have to make sure you surround it with the right amenities and amplification that the market is looking for, and that goes, not just domestically in the United States, but internationally, as Todd was saying. What areas are you focusing on, and how are you creating that consumer volume on a consistent basis?
And so, Todd, I want to go back to a phrase you used, pent-up demand. When I hear pent-up, it sort of implies a burst and then a sort of a fade. And obviously, I mean, this conversation that we're having, it's against the backdrop of a lot of recession fears. And I'm wondering, how you're thinking about the economic environment as you expand.
I mean, I think, Keith and I have this as our daily conversation on many different fronts. I mean, as far as I certainly, we were very fearful of this sort of recession or pending recession, hitting the fact that, yes, at some point, the newness or the reintroduction of being able to go out again and socialize and be in restaurants changed, obviously, the economic decrease as far as just people being afraid of spending money again and going out. So I think all those, having said, I have yet to see a lot of that slip yet, and I don't think we've seen it in even our restaurants, but we are treading very cautiously and looking at every aspect of the business. I think he does that, on fine-tune code every day, getting sort of the idea of making sure that we're not overstaffed, making sure that we watch all our numbers very closely.
We're speaking to Todd English, Master Chef and Partner at English Hospitality Group, as well as Keith Burkhardt, Chief of Staff at English Hospitality Group. Keith joining us on the phone from Thailand, Todd joining us on the phone from Los Angeles. Guys, stick with us because we're going to take a quick break. We're going to do some news, but then we're going to come back with more. Because, Katie, they've got a great outlook on, or great understanding of what's happening around the world. I mean, here in the U.S., they've got restaurants in Las Vegas, in Charlestown, Massachusetts, Boston, West Palm Beach, Florida, Birmingham, Alabama, Washington, D.C. And then outside of the U.S., they've got restaurants in Dubai, the Philippines, in the Bahamas, and more. So a really good understanding of what's happening around the world. I know Todd said that he's not seeing any slippage, but I'm wondering if there's any sort of like weakness anywhere starting to emerge.
Any potential cracks is another metaphor we could use.
So we're going to take a quick break, and we're going to get back to Todd English, Master Chef and Partner at English Hospitality Group, as well as Chief Burkhardt, who's Chief of Staff there. To Washington, D.C., we go for world and national news for Nancy Lyons. Hey, Nance.
Thanks, Tim. Senate Democrats are waiting to hear from the Senate parliamentarian now that they've reached agreement on changes to their marquee economic legislation. They hope to have a vote this weekend. The breakthrough came when Arizona Senator Kyrsten Sinema agreed to move forward on the bill now that it no longer contains a provision that would have narrowed a tax break for carried interest. Well, a bipartisan group of former EPA administrators is endorsing that tax and climate bill. Bloomberg's Nathan Hager has more from Washington.
The group has released a statement calling the Inflation Reduction Act the most significant piece of climate legislation in U.S. history. They say it puts the U.S. on track to meet President Biden's goal of cutting emissions in half by 2030 while making investments in clean energy that will save families hundreds of dollars a year and create good-paying union jobs. The group includes former EPA Chief Carol Browner, who served under President Obama, and Bill Riley and Christine Todd Whitman, who led the EPA during Republican administrations. In Washington, I'm Nathan Hager, Bloomberg Radio.
A day after WNBA star Brittany Griner was sentenced to 9 years in a Russian penal colony, Russia's Foreign Minister Sergei Lavrov signaled that Moscow is ready to talk about a prisoner swap. Secretary of State Antony Blinken addressed that possibility.
What Foreign Minister Lavrov said this morning and said publicly is that they are prepared to engage through channels we've established to do just that, and we'll be pursuing that.
Secretary Blinken spoke on the sidelines of a conference in Cambodia. Global news 24 hours a day, on air, and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenevec and Katie Greifeld here in the Bloomberg Interactive Brokers studio in New York. In just a minute, we're going to get back to Todd English and Keith Burkhardt. They are both of the English Hospitality Group. In the meantime, Katie, I want to talk a little bit about a story by Kate Crater, who writes for Bloomberg Pursuits.
Best job.
I know, in Bloomberg News. She gets to travel all over.
Eats
and
great food.
Eat great food and drink great coffee.
Yeah. So this is an interesting story. So she writes, for all the innovation and debate around the art of coffee making, the basic premise of dousing freshly ground beans with hot water doesn't change too much. But you have ground control coffee. It has a machine that's out to break a cardinal rule of brewing. Don't reuse the grounds.
Oh, I'm like shaking just thinking about this.
You're literally shaking.
Because coffee grounds, once you use them, that's it.
Yeah.
It's like
I've actually never made coffee from grounds, so I can't really
What do you
relate.
do? What do you make coffee from?
Joe makes coffee.
Oh, okay, your
my
husband, Joe.
I also drink cold brew, so I get that in constant.
That comes from grounds originally.
Does it?
Yeah.
Interesting. Learning a lot here. Yeah.
Yeah, you grind the beans.
Yeah.
Then you soak them, if it's cold brew, it's like 24 hours or whatever.
Yeah.
Soak it.
Yeah.
Coarse ground.
Ground control, though.
Ground control. It's based in Oakland. It's made by Voga Coffee. It's an eye-catching glass bulb. This thing looks really cool.
I
We're
haven't
going to tweet
seen
out
this
the
at
story.
Starbucks.
No, I don't think this is at Starbucks. It's got a double helix extraction tube that looked like it's a Back to the Future prop. So it's a window into the brewing process of the machine. It washes coffee grounds with fresh water over separate cycles, usually 3 or 4, each time catching different flavors and characteristics from the beans. The result is a preternally natural, smooth cup without the bitterness or thin flavor that reused grounds will conjure up.
Yeah.
This thing is crazy looking. You got to check the story out at Bloomberg.com.
It looks like it should have like lasers like shooting around inside the bulb. It is pretty cool looking.
What's incredible about coffee is just that everybody every few years, tries to kind of reinvent how to brew it. And there are all these really cool ways to brew it from all over the world. Check out this story at Bloomberg.com and on the Bloomberg terminal.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellito. Weekly gain for the U.S. stock market after that surprisingly strong jobs report alleviated recession fears, but it did clear the path for the Federal Reserve to raise rates sharply at its next meeting. Now, at one point, we did have the S&P 500 index down as much as 1.1%. It ended the day with a loss of 0.2%, lower by 6 points. It was a winning week with the S&P this week up by 0.4%. The Dow up 76, a gain of 0.2%. NASDAQ down 63 today, a drop there of 0.5%. Bitcoin up 2% now, 22,956. Spot gold down 0.9%, 17.74 the ounce on gold. West Texas Intermediate crude 88.55 a barrel on WTI. The 10-year, 2.82%. The 2-year, 3.22%. So again, recapping, turned out to be a mixed Friday, winning week with the S&P as we head into the weekend, down 6 points today, lower by 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. I want to get right back to Todd English, Master Chef and partner at English Hospitality Group. Keith Burkhardt, also Chief of Staff for English Hospitality Group. Todd joining us this afternoon from L.A. Keith this afternoon, evening, I should say, joining us from Thailand. You guys might recognize the names here. I mean, in the U.S., they got the English Hotel and Olives, the Beast, Figs, Todd's, Tuscany, and more. And outside of the U.S., they got Olives, Todd English Food Hall, Figs, and Pound and Hook as well, among many other properties. So just a really great idea of how things are around the world and here in the U.S. when it comes to demand and supply for workers. Todd, I want to go back to something that you said before we went to break, and it's the idea of not necessarily seeing softness anywhere around the world. What can you tell us about regional differences here in the U.S. and outside of the U.S. when it comes to demand, and as we do sort of get through this reopening here?
I think, that's a very interesting question, because I think it's split into a couple categories depending on sort of the type of cuisine, the restaurant it is, sort of the neighborhood you're in. You know, if you look at sort of South Florida now, or where, in Palm Beach area, obviously there's certain categories of types of restaurants. They're always going to kind of flourish because depending on the clientele, their economic situation, whether they have kids, they don't have kids, that kind of thing, how that plays out and sort of what their daily average way of eating is. I think what we try to do is diversify as much as we can in our portfolio. All the restaurants you listed are all across all categories, from luxury to more fast casual. And I think, giving people different options helps us maintain a pretty consistent business depending on what's going on in the world. We always want to have some category that will be filled in one way or the other. So
let's talk about the cannabis category, because it is
I like that transition,
Friday
Katie.
afternoon.
I like that transition.
This definitely caught my eye. So tell me about Last Leaf. Keith, come back in here. So as I understand it, you have mac and cheese, pasta, olive oil. Tell me about that endeavor.
Sure. So Last Leaf was, kickstarted during COVID because we knew that there was a large consumer base at home, and consumers in the cannabis world did not have other optionality in the space. And we focused on primary food groups, not focusing on gummies, chocolates, and traditional, cannabis consumption. Todd, had a lot of connective components to cannabis throughout the years. And we said, all right, what type of products are consumers touching on an everyday frequency? And those were oils, spices, rubs, etc. And we created Last Leaf, which is cannabis-infused primary food group edible products. And we've been very successful as these touch and have a microdosing component to it with both THC, CBD, CBN. And we know that this industry is slowly evolving, especially in the pharmaceutical industries, they see it as a threat because it comes from a natural source versus some of the inorganic compounds.
And it actually works. It actually works, we're finding, in most categories.
That's so interesting,
well.
Todd. I mean, go ahead. Sorry, go ahead.
No. I mean, I think also one of the ways that Keith and I always really started out with this whole idea was really the health benefits and things that we've been approached by all sorts of different categories. From doctors, from medical facilities, from children's hospitals, et cetera. So I think that's a huge category that I think is still being discovered. And I said, I think that is getting played down by the big pharma. Big pharma doesn't want to, he's getting threatened by it a little bit. And so we are big fans of those components of it as well.
Hey, Todd, when you look out across, and I don't mean this in a pejorative sense, but literally, like you're trying to build an empire here. You want restaurants, hotels, nightlife, events, ghost kitchen venues. You've got the cannabis element too here. When you look out across the different properties you have, where are you seeing the biggest area for growth? There's still huge from the standpoint of convenience, meaning food delivery. That we still haven't seen that. We haven't seen that come down. So this would be the ghost kitchen side of things.
Yeah, ghost kitchen.
But how do you replicate what you do, what people have become accustomed to visiting your restaurants? How do you replicate that in a delivery sense, in a ghost kitchen? Because it's more than just the food when you have that experience in one of your restaurants.
Wait, what is a ghost kitchen? Can we just define that first?
Okay, yeah, that's a good question. Todd, you want to take
spooky,
you want to take it away?
That was started, I think, by Travis. From Travis and Uber.
Yeah, Travis Kalanick with Cloud Kitchens.
Correct, and he did Cloud Kitchens, and then so the whole term ghost kitchens, meaning that it was a secret place that people made food, or a warehouse that necessarily was not seen by anyone. It was just a place where they had a kitchen, so that the term ghost not being seen.
Basically, the idea is to create it exclusively for delivery. So you have, the food being made in a place that doesn't actually look like a kitchen or look like a restaurant.
Like a white label, almost.
Not a restaurant. Yeah, it's just a kitchen in a warehouse, with less rent and less overhead, et cetera. That's the whole idea. That you could pull a truck into, or the delivery guys could get in and out easily.
So Keith, as chief of staff, how are you really leaning into this idea of delivery and creating this sort of extension of the brand?
It's a good question. Basically, what we're doing is we're partnering with really strong operators, not both in the U.S. but globally, because you need to have the right technology partner wherever you do this. But Todd has built, I would say at this point, over 100 brands in his career. So for us, this is a quick little pivot for Todd, especially to position a lot of brands on all different cuisine fronts, which makes Todd a really, really strong chef. Not because he's not one-dimensional. He has multiple different skill sets, and we have approximately 9 to 15, 20 brands that we can put into these technology platforms. And also, you see that Amazon, you see Walmart, big retailers, the food delivery on the grocery front is changing dramatically as well, which is interesting. And another component where Todd has already been thinking. Todd's a very interesting creature. He's 10 to 20 years ahead of everyone else in the food space.
Well, we love having you guys on. That's the voice of Keith Burkhardt, Chief of Staff for English Hospitality Group. Also, Todd English, Master Chef and partner at English Hospitality Group. I really appreciate you guys taking the time and joining us this afternoon. Katie, that is going to do it for Bloomberg Business Week on this Friday, August 5th. Thank you so much for filling in for Carol this week.
Thank you for
really
having
appreciate
me.
it. You're listening to Bloomberg Radio.